Here we go on Priceline MMTs. It's Saturday training session. So if you're entering back into the live uh, room, please go ahead and stay on mute as I recap the 440 put and 440 call. So you have put up here and you got a contract over here that is a 440 call off of these last lows and these options. Now, let's let it be knowing that in the training is that they short the contract down here. The call side was inflated. And in the options trading with the public and even professionals in various different option pits, and what a market maker does when these things get inflated, what happens is they make great moves, but then they get inflated. They're going to come down within the put and call ratio mathematical structures. Because when you take a look at the dates, that was on 8:30 week that started there. And when you take a look at a weekly chart on Priceline, which I'm going to try to get again, is you'll clearly see what the assignment is about. And the assignment is here is to understand that when the put side gets inflated and how to establish at the time Priceline was probably trading right up there between 524 and 549. And when the put options had worked, they got inflated here and they came all the way back down to these lows. And at that very time of this movement, you can see here in the video, you were breaking out on those calls from an all-time low, and I'm going to share it with you right now. That was 39.60 as a market maker wholesale price, all the way up to 103.80. That's a big move now. Now, once they got that inflated, what that meant over here was that the put side was working from here to there. Okay, because they got inflated. Then look what happens here. They come all the way down in value here. And as they're hitting the bottom over here, that was the entry. But when you got this really big super part of this move right up here, you got to remember that this side of the market was the right side. It's the short side of the tape. And the low here was 370. So if you were buying, understanding where the weekly chart was on Priceline, then you would clearly know what to do with the trade and how these trades work. And when we look at certain kinds of entries and exits based on inflated and deflated values within the actual trend movement of Priceline equity on a daily compounded and a weekly level. And there is a weekly chart over here. I'm just going to show you what the calendar year low was. Once again, you'll see it here, and you're going to have the weekly chart right here. Okay, and it's still in the video here. So we'll put the weekly chart down here, and we'll take a look at those 549 tops. And knowing how do I buy a put option that's $100 below its current price level resistance levels, and why these resistance levels here were where one can trade various different strike prices. However, the lesson learned is the dollar debit capital risk entry. Dollar debit capital risk entry. And what should I be doing with markets at times when weekly trends, when this weekly trend broke down right here, and now we're going to associate this weekly reversal here, but you can see the really big part of that reversal on the equity side was right here. The high was 523.58. Even though that you didn't get in, if you didn't get in up here, and they were selling short, we were selling short every day, intraday. We have all the live entries and exits and live videos during live market hours to prove it. Go back during this 4-week resistance area, and even over here, there were times that we had big weekly sells, and even over here. And the thing about it is the yearly lows did not break in value here on the weekly level. They did this last week now, And I can tell you that the low here was $411 now and 26 pennies. And we went through that trade. And we were taking 480 puts down. But here's the lesson learned. When I hit that low, the 440 put, right here where my pointer is, peaked. And as we bounced clearly off the low, we clearly saw the value of this 440 put go way down. I mean, look at here. The body got clear down to $20. And people who do not know how to sell the 440 put within the bottoming trend cycle of the equity end up turning a great thing into a very bad, miserable trade. And it happens in the retail public model all the time. We need to be specifically clear that during that big reversal, that's when you had your breakout. But look what happened when this weekly reversal came into play off the bottom. The 440 call, which is right here. Let's 440 call bar. Now let's go over here, MMTs. At that time that this was selling off, MMTs, look what was happening over here. This low price, let's put it down here. Here's the price, $12.20. Okay? So that meant from $103 here, $103.80 a contract. Because when it was working well in the upside bull trend, you were, your call was working well. But when we reversed in these weekly patterns up here at resistance, that's when you got to the highs. When you couldn't take these resistance levels out, you finally peaked right here. You came shot a weekly price movement from less than the low. The low here was $499.25. The high, the short down, the high, $5.54 even. And that was in 9/18 in September. That was the greatest trade right there in Priceline all year, down to that 411. Look at that weekly reversal. So let's do the math just for the sake of it. Go. Here is a snapshot of this full calendar year. Notice that the bottom end of that wick, MMTs, once we broke below our price level when we were shorting up here, and our price level was 425. And just like the S&P, once we broke that 1100 area, we went down to our price target there at 1075. And MMTs, one of the things that you're going to know is that Priceline follows that very well. It's a barometer. Look at this. It came right back, gave it all up for the calendar year, came right back here in that price action, and then bounced like a rocket. And that last equation that I talked about came out to $54.75, by the way. That was that one intraday weekly range from the short down. The thing that I would like to tell you is that this bottom up was 411, and we were getting the 480 put on Friday, 10/7/2011, and it was on the opening bell. And MMT's got that 480 put option. That when we had that reversal Friday on an intraday level on the stock, it worked out well. Okay, in that shorter price that you MMTs did yesterday. Now, when we take a look at the mathematical move up here to here, you can see it. 1220, $38.11. That's that call movement. That's that 440 call. Remember, in the 440 call, when the trend was going down, they took all that inflated premium out and took it all the way down to a much lower low from here. The low then from 36.90 to 103.80. We broke that in the contract down here to 1220. It was on sale at the very same time now when the equity had that big weekly bounce right here. Let me blow this part of the chart up. Most of the move happened right when we hit that low that I just described herein. And basically, it was at its all-time lows there, and buyers stepped in dramatically, because look at the size of that weekly wick, MMTs. That's a huge move right there. And understanding that the call had put in the bottom, you had a decent trade in 3 days. And you'd had to been selling out at the top because these things are very short-lived. Market makers never hold on to them. And understanding that at the very same time that all of this is occurring right here, MMTs, the big wick up, the call, deflated price, warrants a transaction. But look, how was it weighted? Look at the 440 put right here. Right here. It came all the way down in value, and as they were taking that side of the premium out, MMTs, guess what you got? You got a market maker bid over here at the deflated wholesale price to sell back to the public because it was deflated. Let us not forget that it was $103 a contract right here where my pointer is. It was on sale. And when we got that weekly support level in the equity, we bounced extremely high off of that bottom. And that gave you that spread and the reversal here. MMTs will be going through these more and more. We already spent an hour and a half talking about market maker option spreads at a wholesale and retail environment and how to manage both sides of the market relative to the current equity trend and how to position oneself at the right time. So when this is definitely falling in value, this is breaking higher. And there is a market maker transaction. There is a very systematic way of dealing with these right here using your weekly charts as well and your daily compounded 5-day level within the price action structure to get entry and exits as market makers and options using wholesale to wholesale. So I'm buying wholesale here and I'm selling retail to the public from my puts, and I'm getting out as they start to fall in value. Once I start to come up in value here, I know to be selling at the top up here. And remember, lots of people that try to trade options in a public model, they just hit numbers. So what? Okay? And they don't have the weighting of these movements correctly. And then they don't have the actual value of one side of a market is wholesale I buy, and the other side of the market, when I buy that and I'm selling that, and the other side of the market gets wholesale, I'm buying that too. And I'm constantly working within the actual risk management parameter structures that are developed in a 440 call and developed in the value of a 440 put. And there were many times that the put had great breakouts. Look at here. This is that, and there was times when that 440 put lost value, it got wholesale here. Okay, it was that was the first inflated area to here. Then here's your second inflated area back to here. And here's your third one that makes a higher high in the contract. And understanding when that trend management is working in your favor, so when I'm buying that call, I'm breaking out, I'm already sold this up here now. But there are times to buy them on a daily level. When this side of the market's losing value, then this other side of the market here is going up in value. All right? Or vice versa. Okay? So it's very important that we moving forward now during the earnings season especially is that all of these price structures and parameters using the appropriate SMF market maker tools guide us in the right way.